So in this video, I want to share with you a chart that I think is extremely alarming and expect the S&P 500 and the overall market to drop even further. So, I like to keep it real on this channel. I like to give you guys the facts, what I'm seeing. And again, this is not financial advice. You can make your own decisions, but I just want to keep you guys informed. So, hope you love this video. Make sure you smash that like button and don't forget to subscribe. So what we have over here is a chart of the S&P 500, which is this blue line over here. And as you can see, as of the highs back in December, the market has been in free fall. But what is most interesting is this black line. And what this black line is analyst estimates of the forward 12 months earnings. And what you can see is we are currently, as of May the 31st, we are at all-time highs in terms of analyst estimates. Now, considering that the market has dropped, 20 odd percent, why are we still at all-time highs? And that to me is concerning. We are coming up now into Q2 earnings season, and I believe that the market or analysts have not factored in the actual drop in not only the Q2 earnings, but the forward, Q3 and beyond guidance for the rest of the year. And we all know what happens. We've seen it with PayPal, we've seen it with Meta. When you miss your earnings and give a weaker guidance than analyst estimates are expecting to see, which at the moment, and we'll go into it in a second of the commentary of this slide, analysts believe over the next 12 months we are at record high EPS estimates. And, we'll factor off some of the macroeconomic conditions that we've got in a second when we look at this in perspective, that, in my opinion, I don't believe that most of the companies in the S&P 500 will be hitting not only their Q2 numbers, but also looking at the forward EPS guidance for the rest of the year that analysts are predicting. So again, this is as of the end of May. So let's read to see what analysts have done between May and June this year in terms of analyst estimates, so we can get a view on where this black line is going. Is it going down? Is it going straight? Or is it actually going up? So if you read this, analysts have lowered EPS estimates for Q2 2022, which makes sense, but have raised EPS estimates for current year 2022 during Q2, right? That is the scary bit, in my personal opinion. So, the question that was asked is given the concerns in the market about a possible recession, did analysts lower EPS estimates for the S&P 500 companies more than normal for the second quarter and for the full year during the second quarter? The answer is no. Now that is scary. So over the past 3 months, analysts have lowered EPS estimates for the second quarter, but the key thing is by a smaller margin than the average. Have you seen where we are? In the last 10 years, outside of COVID was quite quick. So even if you ignore COVID, we've been in an upward move. And they're saying to me that the Q2 earnings revisions over the last 10 years have been bigger than what we're seeing now. That is alarming. Very, very alarming. So not only that, right, but they've increased the EPS estimates for the full year. So the analysts are expecting the second half of the year to be better than what they predicted back in, Q1 this year. Now, you've got inflation higher. As a result, we've got interest rates higher. You've got the Ukraine versus Russia war. You've got supply chain issues. You've got all of these things plus more, housing, mortgage rates, and all of these different things, all contributing to the S&P falling 20%. Now, I get it. There are a lot of energy stocks, and when you read it, I'll link to the paper that has all the information and all the charts in this below this video. It does show that a lot of them, in terms of energy prices and energy stocks and electric electric stocks, oil stocks, etc., that form part of the S&P, are holding this number up, which makes sense. I get all of that. But even if you look at the change in information technology, so IT, so your Apples, your AMDs, all that kind of stuff inside there, your Googles, there, I think it was from memory, only that they revised their full year EPS by only -2%. Now, if that's the case, when Apple, Google, they all release earnings and they release their guidance, it, in my view, would be less than 2%. The market will fall, right? It's unless Apple can smash it again out of the park, which it's going to be very, very difficult given the size and the record quarters they've had last year. I can't see it. And because of all of these factors and the way that analysts have estimated, if they estimated it a lot lower and they gave lower guidance, it matched expectations, you don't expect a big move. But when there's a disconnect between analyst estimates and what the guidance from the company is, that's when you get a downward move inside the S&P or stock market or the index or however you want to look at it. This is what I'm warning you guys about, that if you are thinking we're near enough a bottom over here, I still think we've got some more pain to go until this curve starts dropping down like it did in COVID. Probably won't be that steep, because the thing was with COVID, right? We thought the end of the world was going to happen, right? And then analysts changed their estimates, and then when stimulus came in, we changed it again. But here we've seen no change. And again, I've butchered this graph up, but as you saw, it was going, I wasn't even petering off into this movement here. I would have expected to see it starting to happen a lot earlier inside Q1, but we are where we are. Again, just want to keep it real for you guys. Hope you've enjoyed this video. Make sure you like and subscribe. There's some other cool videos coming up now. Check those ones out, and I shall see you guys in the next video.